But let's go back to the bigger story of the day, which is, of course, the RBI and what they've done and what they've not done. What they've not done is given to, the temptation to change their stance. Latha is here with the editor's take. Latha.
I would call it an unexpected hawkish pause. Other things are expected. The rate was not expected to be changed. Pause continued as expected. As well, the very wording of the stance has not been changed. That's what our poll showed. But there were minor hopes here and there that the stance would be withdrawal of accommodation, but some softening. No, there is no scope at all. In fact, they have actually been hawkish. And I'll tell you 2 or 3 reasons why I think it is a hawkish policy. One, almost everyone expected that the inflation forecast would be revised down to either 5%. That was the conservatives. And the Dove saying it could be 4.9 or 4.8. Lo and behold, it is 5.1. Not even come to 5, which means the first quarter, the inflation forecast clearly has come under RBI's expectation by 50 basis points. They've just arithmetically removed that and given you. They have not assumed that the momentum of slower inflation will go on to the second half, which is what many people assumed. And the fact that they haven't assumed that clearly makes this a hawkish pause. The other point is the repeated insistence that we are not done if we just come to 6%, because the target for CPI is 4% plus or minus 2%. Coming under 6, you are within the target, was how the market was interpreting. By saying it, I think about half a dozen times that you have to, we want to be CPI to be aligned to the target of 4% was very clearly a very, very hawkish stance from the Reserve Bank governor. And even on liquidity, there have been instances when rates have been, when yields are falling in the bond market and banks dropped yields or dropped lending and deposit rates just by 5 basis points or something. Reserve Bank just swooped and sucked out all the liquidity, which is coming in probably because of the 2,000 rupee notes in part. So the fact that, and they said it, what will be your response when banks cut? You saw our liquidity response was the answer, which means we won't tolerate yields or rate softening. So I would therefore say it is hawkish. There was just one line which I would say is dovish, where when asked, are you not going to change till inflation gets to 4%? The answer was, we want CPI to be aligned to 4%, not at 4%. So that was a bit of a giveaway, which means they may probably change their stance before you get to 4. Beyond that, this was hawkish and how.
Latha, I think markets always feel they can second-guess central bankers. Central bankers today, in the last 24 hours, are saying, we don't think so. Look at Australia, look at Canada, look at the Reserve Bank of India today. And I think that reality check is playing out in the market.
And they have, I guess, people have lost money in the swap market. Spot yields have not moved much, 6.98, 7%. That's it for the 10-year yield. But if you're a player in the swaps market, they were factoring in a cut in October, about 2-3 weeks back. After the non-farm payroll, it was December. Indian swaps, a rate cut from RBI in December. Now, the market has pushed it to February, and even there, like an 80% chance. Even then, not a 100% chance.
So, rate cut